We're going to watch Double Dipping Dave Auxier, Mr. Dave Auxier, who draws a $6,000 a month pension from Trimet. Obviously couldn't live on $6,000 a month, and so Neil brought him back as his confidant bookkeeper man. And so Dave is now making that $6,000 a month plus another 10 to somewhere between 10 and 13,000 a month. I'm not sure exact figure, but I know he's somewhere around 175,000 a year. And Mr. Double Dipping Dave was brought back as a temporary bookkeeper, although they call them financial officers. They're just glorified, overpaid bookkeepers. Yeah, so Double Dipping Dave, I'm sure Neil brought him back because he could trust him, and Neil's all about making sure he only has people around him that he can trust, or else some bad information might get out. Neil can't have that because Neil's such a wonderful general manager. He needs everybody around him to say, "Oh, Neil, you're a wonderful general manager. He's wonderful. He's wonderful." Yeah, right. Anyway, there's this is actually the most important part of the board meeting. It's the most boring, and I think they like Double Dipping Dave to be this kind of speaker that could bore a crack addict to death, because that way nobody will listen to him. You see, Trimet's all about trying to keep people away from their business. How do we get people away so we can conduct our multi-million-dollar business in privacy? You know, that's what they really want, and we know that. You know, they were probably so happy at this board meeting, only 2 people bothered to show up to testify. That's okay. Opal's coming back. They're not the kind of people over there at Opal to give up. All right, let's listen to Double Dipping Dave. I'll cut in.
There's a good report in the packet. That's why I want everybody to realize we've had that. So please proceed, Dave.
Well, as you know, our FY15 budget is always based on applying growth rate assumptions to our estimate for FY14. So this third quarter results are kind of our last look at actual results before we finalize the FY15 budget. So they take on a little extra significance in that regard. So I just want to hit a couple of the major revenue categories and expense categories, explain where we are in FY14 relative to the assumption that we used in creating the FY15 budget. First, on passenger revenue, year-to-date passenger revenue is up 3%, and in the third quarter it was up 2.5%. However, to hit our FY14 estimate that we used in creating the FY15 budget, we actually would need to be up 5.2% in the fourth quarter to hit that estimate. If we only hit 2.5% growth, would be about $800,000 short of our estimate. So this is one revenue category that we'll probably need to propose a minor change to as we bring to, and we'll discuss with you at your next May briefing.
Oh, I just missed that. Somebody just apparently got out of the train. And
Okay.
You know, if you don't listen to dispatch, you're missing hours of comedy. Or somebody got out of the streetcar and then pissed in the front of it. Anyway, Dave there, Double Dipping Dave, is telling us that what TriMet does is they budget for the best case scenario and then revise downward. You think that prudent budgeting would require you to budget for the worst case scenario, and then if it comes out better, you have extra. But apparently what they're doing is budgeting for the best case scenario, which I've never heard of. I mean, any prudent person designing a budget designs a budget for the worst case scenario, not the best.
Payroll tax, third quarter results look good. Third quarter payroll tax revenues, and here I'm talking about the total revenue growth, payroll tax revenue growth, so it has both the rate increase, inflation, and employment growth in this, but grew 7.8% for the third quarter. Year to date, we're up 6.7%. We would need a 7.7% growth in the fourth quarter to hit our revenue estimates.
So there you are again. You see, they've estimated higher when they should be estimating conservatively. I'm not sure why they're doing that. Maybe he'll tell us.
We're in line. If we only hit the 6.7% year-to-date growth number, would be about $630,000 short of our estimate. And just to remind you, the FY15 budget assumes a total growth of 6.3%.
Mr. President, could I just ask a quick question there? So, is it the fourth quarter then that because that's when, is the fourth quarter of our fiscal year include the April tax filing? So do we see a significant bump, or is it pretty uniform throughout the year?
Well, the payroll tax is paid quarterly. It's only the self-employment tax
Correct.
that's paid annually. So the numbers I'm giving you here are just for the payroll tax,
Correct.
which makes up by far the lion's share. So the self-employment numbers are just coming in now. They're basically due on April 15th.
Correct.
And we'll know more really by the end of next week, because there is a little lag from the time the filed to Oregon Department of Revenue giving us the money. So I'm really not giving you any updates on self-employment. We think the results will be good there, but I'm just giving you the payroll tax numbers at this point.
Correct, but when you were referencing the potential of what we have to do in the fourth quarter to be able to hit our budget, and we just did, what, 6.7%?
That's the three-quarter year-to-date number.
And so that 6.7% doesn't include the potential bump of the self-employment tax, which probably historically haven't been, like you said, it's not that significant portion of our tax revenues.
So, and these numbers I'm giving you are all just payroll tax?
Correct.
So they don't assume anything relative to self-employment at this point. We think we'll be, actually, self-employment, we think our revenue numbers might be just a little bit low, but we'll know a lot more in 2 weeks.
Oh, something going on the Max. It must be great to just sit back and have money just rolling in for doing nothing. I mean, the money just rolls in. The payroll tax, self-employment tax, here, we just get this money, and we have no accountability in how we spend it. It just comes into us. That guy sitting there, that double-dipping Dave, he's the one that's keeping track of all of that, who's getting what, and that's why Neil kept him in there, because you can trust double-dipping Dave.
All right, thank you.
Federal grants, we talked about it a little bit today at the TSCC hearing, and you've heard me complain about the GASB accounting rules. Luckily, we're at a point in the year where the grants are actually coming in now, so the accounting rules are irrelevant. But we did receive.
Did you hear what he just said? He said the accounting rules are irrelevant. What do you mean the accounting rules are irrelevant? What the hell is that supposed to mean, double-dipping Dave?
Receive $18 million in March. Within 30 days from now, we expect to receive another $66 million in federal operating grants. And within 60 days, we should receive our Portland, Milwaukee $100 million appropriation.
Holy shit, are they rolling in dough? Holy shit, are they rolling in dough over there at Trimet? So no wonder they gave themselves bonuses. They couldn't help it. I mean, all this money all around them. Of course, can't give anything for those pesky health benefits. We're going to strangle you. Millions and millions are rolling in. They couldn't resist giving themselves a bonus. You got millions sitting around there. What a disgrace this company is.
In total, federal operating grants look like they will be $1.4 million over what we had assumed in FY14 and the proposed version of the FY15 budget. So this is a revenue category that will propose an increase. In total, all these three major revenue categories should net to virtually no change, but a little movement within the three categories. On the expense side, I'm just going to quickly highlight 4 expense categories. There's a lot more moving parts on the expense side, but as you saw in the operating statement, the income statement, expense are running pretty far under budget as well.
You heard it right there. The expense budget is well under what they projected. That means they have a lot of extra money. He said it right there.
The 4 major categories I was going to highlight are workers' compensation and personal injury and property damage claims. If you remember, we self-insure for all those claims, We self-insure for the first $2 million of any workers' compensation claim and $5 million for any personal injury, property damage occurrence. So year-to-date, we're about $700,000 under for workers' compensation and about $1 million for personal injury and property damage. Here we budget the historic numbers, and it's a very bumpy ride between years, so I don't think we'd be proposing any change in this category just because we'd get so much movement between years. Another third category I was going to highlight is diesel fuel. Again, as you know, we're experiencing good results there. We're about $1.1 million under budget through March. Our average price has been $3.03 a gallon, and we budgeted $3.30 a gallon. In the FY15 budget, we did lower it 10 cents to $3.20. Haven't made a determination if we'll propose a change to that number or not yet. And the largest budget variance that we're seeing is on some union wage categories. And the FY14 budget carried forward the historic practice of budgeting all positions at their top rate. But since we've been doing a lot of hiring in FY14, we have a lot of union employees who come in on a wage progression. If you look at the two major union entry points for mini-run operator or service worker, a mini-run operator takes 35 months from when they're hired to reach the top rate, and a service worker takes 48 months. So we're running, with new hires coming in, we have a fair amount of budget savings in these wage categories.
Well, that's a fascinating bit of information there. You know, a lot of us knew that the management had putting a lot of pressure on people that had been at Trimet for quite a few years, including myself, among others. And we knew that there was some kind of pressure going on to make it miserable so people would leave. And that's why, so they could get rid of the top wage employees with the longest vacations and make room for the lower wage employees with no vacations. And you add all that up, and our pensions are so rotten. I mean, the cost of the pension to me, the money they're paying me on the pension, dwarfs what they're going to save in that person they hired to take my place. And with their plan to destroy my union health benefits, they're going to save millions of dollars. You know, add this by all the retirees, it's going to be millions and millions and millions of dollars, and I know this was the plan all along. They gave us crappy pensions, the promise of good health care, which was negated because they lied about it, and the union got conned. And they knew what they were going to do. I'm convinced they knew what they were going to do. Now they have all these new hires getting low wage, no vacation, and their health care is they're not getting any health when they leave and all of that. And it was all part of the master plan for them to do that. It's part of that unethical management that I'm talking about. Is, you know, drivers to them are just pieces of equipment. They're replaceable pieces of equipment to those oligarchs. And so he's talking about how much money they're saving by doing this.
And in total, that equates to about $3.7 million for the fiscal year. Well, if you think about those savings, there's kind of a little bit of a mix of primarily one-time only savings, but somewhat of it is ongoing because you always have some new hires coming in. So I think we'll propose a minor change in the budget relative to this category, or how we budget for these positions, but probably not to the full extent of that 3.7. It'll probably be a fairly small percentage of that. Those were the revenue and expense categories I wanted to highlight at this point, and with that, I'll conclude my report.